Good morning, everyone. Today is the 26th of August 2025. It is 8:38 a.m. right now at the recording time. I've been quite inactive for the past 2 weeks, been quite busy with a lot of things. And I'll be away on a trip to China, Xinjiang area in October. So I'll be away about 2 months' time from then. About I think 2 weeks. I'm not sure at the time, but then I'll be away. So now I'll be doing a small short. I hope it's a short one. So it's about Dow Jones, Bitcoin, and all the some of the major indexes and everything. So let's check out the Dow Jones. For now, in the weekly chart, Dow Jones appears to be topping. I believe it's topping right now. If you notice that I've added a small little moving average here, this moving average I set it to 60 because I noticed that anytime the prices touches this one, it tends to have some kind of a bounce. As you can see, every time it breaks below it. So this 60 is an addition to this 200-day moving average. It sort of like allows a faster reaction time for it. Means if it's on a strong uptrend, you're most likely to bounce off from this one. As compared to this one, 200 moving average, it will take some time. It will just come down here. If you can see that the previous time is 2023, and then the next one is about 2025. It's like 2 years apart for it to come back to this mean. So if this one, it will be a little bit shorter, like this one. It will be a little bit shorter. You can adjust this one to according to the bottoms here, so that it clings nicely to the chart. But I think I'll set it to 60. So weekly chart for the Dow, it appears to be topping. You can see here. Oh, where's the line? Okay. It appears to be topping. It's touching the previous high here that was achieved in December 2024. So when it touches this one, uh, the previous time it came down and then a small rebound back up to, it fails to enter into the zone actually, and then crashes down again on quite a few months of downturn, and then it goes back up, slowly recovers all the way to grinding its way up here. It takes about May until August, about 3 months time. Grind its way all the way back up to the previous high, and it's taking some time to break through, but I think it might have another serious pullback first, maybe to this zone or below it, slightly below it, like this one. It breaks below it and then goes back up. It might break below it somewhere around here, make a small base, then break and test this zone again. This is one of the possibilities, but I will not discount the possibility of that it will go all the way down to here, to this previous, to the main mean 200 moving average mean. So it might come all the way down to this one. So yeah, expect pullback, especially when it's near resistance zone. Do not try to buy here unless there's a strong move upwards, which I don't think it in this case it might happen. This is a weekly chart, by the way, so just let you know that it's a very long term. For shorter term, it appears to be a small breakout from here, but it can be a fake breakout as well. So this is the previous high here, and this is why is it cross? I think TradingView has some kind of updates, causing everything back to the default, I think. Anyhow, this is the previous high, immediate previous high. This is the highest point achieved. So as you can see, the 60-day moving average is a very good reversal points. You can see every time it touches here into this zone, this zone here between the 60 and the 200 moving average. Every time it goes into this zone, expect some kind of move upwards or somewhere near it whenever it touches this zone or near into it until it fails to break into it, and then it starts turning around, and then it breaks up again. Every time it touches this zone, it breaks up. Very strong momentum upwards. It will just barely touches the zone and then continue upwards. This shows that the momentum is very strong. But when it breaks into this zone, do not panic unless there's just this kind. There's no rebound, just all the way downwards. So this is a kind of a cautionary tale for you when it breaks into this zone and it doesn't bounce from this zone area. It breaks below the moving 200-day moving average and then bounce a little bit back into the zone. This zone became the resistance zones now instead of the support zone. It became the resistance zones, resisted strongly, and then a strong crash down all the way downwards. And then it takes quite a lot of time, a V rebound actually. It's quite a V rebound here. So not too perfect. It's just a rebound and then a bit rather and then breaks again. So this 60-day moving average is quite a good addition, I think. I hope it will be a better one. So far it's working perfect. So let's check out Bitcoin. Yeah, Bitcoin. Bitcoin, let's see. Okay, Bitcoin, as you can see here on a weekly chart, it resisted against this zone. Is perfect. You can see perfect resisting on this zone. I mean support. Every time it comes down here is very nice support and then breaks up. Very nice support and breaks up. It doesn't even enter into this zone between the 60 and 200. So if it goes down again and it enters into here, which is quite highly lucky because the previous two times it didn't enter into this zone. So there is a possibility that it will enter into this zone somewhere around here, which is in my opinion a good buy for Bitcoin. So because as long as this moving average are still pointing upwards, anything into this zone, and you can see that you can time it when the momentum slows down and then start appearing to have blue candles. You can buy it here and then wait a few, because this is a weekly chart, you have to wait a few months time. It will enter back to this area, most likely this area. So you, when it breaks up all the way here, you can just sell it and then wait for another pullback into this zone. Just trading it on a longer term trend, because not everyone can face the charts daily. You can just trade like a passive trader. You don't have to be very active like this one. When it goes into here, you know that this is a support zone area, and you see that the momentum slows down near this zone, you can start buying here. And you start buying here is around let's give it $80,000 level, and it goes all the way 100,000 plus level. It's a very good trade in my opinion. It's just April until now August. So this is a very good profit if you do it this way, just like here. You won't be buying here because you know that it is a bit far from this zone. So you sort of eliminate any bad signals here. It goes all the way nearer to this moving average zone. Uh, Most probably you'll be buying here when it goes down here, but there's not much of momentum slow down here. So you'll be entering somewhere around here and then wait a few months from this is September or maybe August. Wait all the way up here, and then strong bounce up. Momentum slows down, and you'll be selling somewhere around here. So September to December, few months time, you will be making from let's give and take 58,000. You buy in at 58,000 and you sell about 100,000 plus. That's 100% gain for you in 3 months or 4 months time. So this is a very good trade if you trade this way. So because every trader is different in their trading style, so and their risk reward ratio. Some would prefer that I will just buy in here and then wait a few months when I'll just check out the chart every 1 or 2 weeks time. When I see this kind of weakness, I'll start selling. There's no wrong in it. So some will prefer maybe a 15-minute chart and you'll be trading all these things. Yeah, like this one. If you're a trader who trade short term, very short term, you'll be shorting this. Let's say this is a stock or something. You'll be shorting here, and then when the momentum slows, you'll take profit here, and then it's short. It goes back into this zone, and you short it here, and you take profit around here. So there's no right or wrong to it. Just make money. Trading is to make money. Do not think that you want to own the company or anything. You just want to make money. So Bitcoin on the daily chart. Let's check out the daily chart. Yeah, you can see that Bitcoin after the run up from here starts showing lower high, goes all the way back down to this support area. You can see previous low here, supported from this zone. You can see the momentum slows down. This is a very good buy-in. You buy in here, and then you will most probably be scared out somewhere around here, which is normal. You can, it's like a $6,000 gain, about 6%. So it's not too bad, but you'll be having some kind of headache when it jumps all the way to 120,000 plus. It happens. It happens. Some of the more daring trader will be entering it again when there's a strong momentum starts showing up. So most probably I'll be missing this because I prefer to play on the safe side. If you buy in here again and you ride it all the way up here, you'll be tend to make about another 10% or 20, 15% maybe. So totaling about 20 plus percent. Then when it goes down again, you won't be buying here because it's quite far from here, from the zone. It goes back into this zone, you'll be buying here. You think that Bitcoin will eventually break this one. Goes all the way up here and it fails to break, you'll be exiting here 120 or 119. You'll be buying around 113. So it's not a very big chunk. Then it goes all the way down, breaks below here. You can see that the momentum slows down here. You'll be planning to buy here, but there's no blue candles yet. So you just wait. Still waiting. For now, it has entered into this zone quite deeply. If it slows down and starts having some kind of small candles and everything, just like this one, because here is the previous low. Now is a lower low. This is the highs, double top. When there's a double top and there's a lower low, just think before you enter. In my opinion, I would be judging whether to enter or not here, because if you enter here just because there's some kind of rebound here, the rebound could be very small because this signs are showing that there's weakness in the market already. So it might just have a small rebound and then breaks below. It's like here. Maybe it will slow down here, consolidate a bit. You think, oh, the momentum slows down. There's a small blue candle. You enter here, and then it just goes down. This is a possible scenario because, as you can see, this kind breaks here, small candles. You think you're just riding a way up, and then breaks down again, or somewhere here. Goes into here, momentum slows down, you think you're going to go up again, and then it breaks down. So it happens. That's why stop loss is very important. There's no 100% in trading. So just make myself clear. you have to be aware that you will lose money in the long term. Just make sure your total is making money instead of losing money. So you will lose money eventually. Let's say it goes here and then consolidates. You think it will go up. You see a little bit up, and you buy in here. You buy in here, and then it goes up. You're happy, and then it crash down. So how do you protect this? Just having a stop loss here would have exited your position, and just lick your wounds and carry on to the next trade. There's no point waiting around for this to reverse all the way up again. So Bitcoin now is has retraced a lot from the 120,000 plus level all the way to 109,000. So this appears to be very strong pullback. Expect some kind of serious pullback. As you can see, even the weekly chart shows a red candle. Do not try to enter here, as it is very far away from this weekly chart 60 moving average and this 200 moving average zone. So if this goes all the way down to return to this mean, I previously mentioned that there is no return to the mean for past 2 years. So if this goes all the way down here to this mean and you buy in here, you'll be looking at a 50+% loss, maybe 70% loss of your portfolio or of your position. So be aware that this can happen. That's why I wouldn't be touching Bitcoin in the near future. It might just go down here and touch this one and then rebound. It might also go all the way down to here because it's very far. So when there's a red candles here, do not try to enter on a daily chart, even when there's it appears, oh, I remove this one first. Even when you see, oh, this is, the momentum is slowing down here. So this appears to be a nice position. It will go back up here somewhere. It doesn't mean 100%. There's no 100%. So you try to enter and catch this move up here, but then the weekly chart shows that it's going to come down. So just you have to judge it for yourself whether you want to enter here and go up here. It can be very risky, in my opinion. I won't be entering like this. Okay, the last one we'll do is gold. I think gold is a very weird commodity for now. There's not much of move here. After this giant move upwards, it's spent the past few months consolidating. So this kind of consolidation, you can see here. Let me zoom in. So this kind of consolidation, after this move upwards, all these, you can see all these wicks, it attempts to push its way upwards. The sellers strong, they push it back all the way down. So this goes on for a very long time. You can see, but then you can see the wicks are getting smaller. The wicks getting smaller will show that buyer and seller are actually drying up. So the position, we won't know where it will go, but then it's quite far away from this 60 line. You can see every time it pulls back, it's quite far from the 60 line. So this might be continuing like this for a while until the 60 line catches up. The line catches up, then breaks up again. This is a possible scenario for gold, but then all this weight will have caused you to lose your mind. It will take a very long time to wait itself out. So you're here to make money and not to wait around. So this, I wouldn't be entering here as well, unless I'm a scalper or something like that. So I wouldn't be entering like this kind. If you are a trader that specialize in this kind of moves, you enter here and you sell here, then you enter here and you sell here, maybe enter here and then you sell somewhere around here. Maybe you will be trading this kind, but I won't be trading this kind because you see this kind of sideways move. This is very bad for trader like me. I am usually trade according to the trend and momentum. There's no trend or momentum in gold for now, because you can see every time it touches this one, it will bounce, touches this one, it bounce. So every time you expect nearby this 60 moving average, it will be very nice to bounce upwards. So you can enter here and then wait for a bounce. Every time you get a few large candles, just sell it off. You will make money this way, but just not my cup of tea. So gold will be on the sideways. So let's check out Tesla. This is will be the last one. Oh, Tesla is not looking good too. Let's check out. Okay, Tesla, after this giant move downwards, it slightly breaks the 200-day moving average, but recovers. It recovers, so it's not too big of deal. It's quite good. It recovers, rebound, and then sellers come in and start pushing it all the way down again until this 60 moving average line. So when it goes here and the momentum starts down, drying up, and then you can see that this momentum is drying up. If you are more risk taker, you can enter around this momentum trade drying up part. If you want to wait for confirmation, a blue candle appears or a green candle, depending on which one you're using, what color you're using. So you can enter here and then wait for a few weeks. You can make some money, not much, a little bit. Or you can go down to the lower time frames. You can see every time it goes into this zone, a bounce, goes into this zone and breaks above it. Is also considered a good one. Every time it breaks this one, and you can see that the momentum slows down, it usually shows that it will break up again. So this is normally a good way to buy in. See, you can see a lot of possibility, a lot of possible trades for you. So you can just trade this kind of deals also. But I won't be trading as usual. This is a very sideways move for me. I prefer this kind of move, this kind of giant big move. I won't be able to catch all of it. There's no way I can do it. Maybe someone can. Most probably I'll just can see this kind of zone. I'll most probably enter here, break out, sell somewhere here. Momentum slows down and then regains again. I'll buy in, maybe sell here, and then momentum slows down. I expect down, but it didn't. A few days or weeks on the consolidation mode. Every time there's a consolidation mode, expect another move upwards according to where the trend is heading. So this is very important. And when there's a consolidation mode, expect a move upwards. So if it's going down and it consolidates, expect a move to downwards. So this is what I expected. And when there's a momentum, you can see all the while the candles without very big candles, and there's a strong momentum on the second candles. You can see the first candle and second candle. I'll be buying here and then wait for it all the way up here. So I'll be selling here. Then when it goes back down here, it's still a little bit far from here, but if I were to really enter, I wait for it to touch this zone. So this one most probably I won't be entering. When it breaks here, I'll be entering here most probably, and then take a loss here. Most probably take a loss here. So it's not a big deal. You will take losses in trading. This is where I'll exit, take a loss, because I'll be most probably buying here, somewhere around here, and then this small loss. But all these big gains will have cut out all these small losses. So when it goes back up here, because it breaks below this 200-day moving average, I won't be buying. I'll be a seller if I trade the short side. So this is the way you should trade. Just make sure that at the end of the day you will be making money instead of losing it. So dollar yen, not very nice. doesn't have, see, doesn't have too much of a move upwards. Every time it goes into this zone, it shows that there is a weakness to the stock or commodities already, like this one or this. There is a rebound, but it's not very strong. I prefer this kind when it goes into near to the 60 and then it bounce back up. This is very strong move upwards because seller fails to push it into this zone, push it near but it bounce. So like this one, if it push it into this zone, the bounce is strong, yes, but somehow it's not very into my kind of trading. It will go down here and then most probably it will go back up here like this. This zone is very important zone. I realize this when I'm trading the longer term. Every time you trade longer term, this shows very nice moves. So every time it goes into here, you can buy and then you can see it lack the strength to continue upwards. But then when it goes back down here, it fails to push down into this zone the second time. This is a very good entry and you will most probably make money out of it. Okay, I try not to make this video too long. It's been a very busy weeks for me. So just let you know that I'll be away on a trip to Xinjiang in October. So I'll be away and hope you can trade safely. Okay, bye.